Welcome back. Markets closed Friday at all-time highs. The S&P 500 at 7,580. The Dow above 51,000 for the first time ever. The Nasdaq at 26,972. May was the S&P 500's second positive month in a row, up 5.2%. The Nasdaq surged over 8%. But since that close, a lot has changed. The Iran deal everyone was pricing in did not get signed. Trump sent tougher terms. The IRGC shot down a U.S. drone. An oil tanker was hit by a missile in the Strait of Hormuz. Israel crossed the Litani River into Lebanon in its deepest incursion in 26 years. And yet, Sunday night futures are flat. S&P at 7,595. Dow futures down 30. Nasdaq flat. The market is holding its breath. Three things to cover: where we closed, what happened over the weekend, and the 5 events this week that determine whether the 9-week winning streak becomes a 10th. I am Daniel Reed. This is Market Lens. Friday's tape. The S&P 500 gained 1.4% for the week, the 9th consecutive weekly gain. That has only happened 10 times since 1945. The last time was December 2023. Two forces dominated. First, Dell Technologies. Revenue of $43.8 billion crushed the $35.4 billion estimate. AI server revenue hit $16.1 billion, up 757% year over year. The backlog is roughly $51 billion. The stock surged 33% in its best single day ever. Snowflake followed with $1.39 billion in revenue, a $6 billion AWS deal, and a 36% surge. Microsoft jumped 5.4% on Friday to $450 on a roughly $37 billion AI run rate. Nvidia went the other way, down about 3% for the week as money rotated out of the chip leader into the broadening AI trade. Second, the Iran ceasefire trade. Core PCE hit 3.3%, the hottest in nearly 3 years. Headline PCE hit 3.8%. GDP was revised down to 1.6%. Consumer sentiment hit a record low of 44.8. The market ignored all of it. The VIX closed at 15.34, the lowest since January. Oil fell nearly 10% on the week. The 10-year yield dropped 12 basis points to 4.44%. Goldman Sachs raised its year-end S&P 500 target to 8,000. Short interest across U.S. equities hit a record $2.13 trillion, the highest since 2011. That is where we closed. Now here is what happened while the cash market was off. Friday afternoon, Trump entered the Situation Room for a final determination on Iran and walked out with no announcement. Over the weekend, the New York Times and Axios reported he sent a tougher proposal back, demanding more specific nuclear guarantees and a firmer reopening timeline. Trump told Fox News Saturday, "I am in no hurry. If we do not get what we want, we are going to end in a different way." Iran's chief negotiator Ghalibaf responded Sunday, "We will not approve any agreement until we are certain the rights of the Iranian people have been upheld." On the military side, the IRGC shot down a U.S. MQ-1 drone over the Persian Gulf. Satellite imagery confirmed an oil tanker was hit by an IRGC missile in the Strait of Hormuz. The prediction market for normal Hormuz traffic by June 15th now sits at just 5.5%, down from 8% last week. Defense Secretary Hegseth said the U.S. is more than capable of resuming military operations if talks collapse. In Lebanon, Israeli forces crossed the Litani River and captured Beaufort Castle, the deepest incursion in 26 years. The UN Security Council meets Monday. The core read across: the deal is not done. The 60 to 70% probability that was priced into last week's rally needs to be reassessed. The gap between the diplomatic track and the military track has not closed. It has widened. Now the week ahead. This is the most consequential calendar week of the year so far. Monday, Hewlett-Packard Enterprise reports. Direct read on the AI server demand that drove Dell's 33% surge. If HPE confirms, the AI infrastructure trade broadens. If it disappoints, Dell looks company-specific. Tuesday, Palo Alto Networks, trading near its 52-week high after the $25 billion CyberArk acquisition. The market wants to see platformization ARR growth and whether the 112 million share dilution is normalizing. Wednesday, this is the heavyweight. Broadcom reports after the close. Revenue projected at $22 billion, up 47%. AI semiconductor revenue expected at $10.7 billion. The options market is pricing a $150 billion implied market cap swing. 3 things to watch: the Google TPU partnership, the OpenAI custom chip deal, and VMware margins. CrowdStrike also reports $1.36 billion in revenue expected, up 23.5%. The Whisper number is 3.3% above consensus. Thursday, Lululemon. Clean read on premium apparel demand. Bull case is international expansion. Bear case is the North American consumer pulling back. Friday, May jobs report at 8:30 a.m. Eastern. Consensus at 93,000 payroll additions. Unemployment at 4.3%. 3 thresholds matter. Above 150,000 pushes the 10-year yield back toward 4.70% and reprices equity valuations. Between 50,000 and 100,000 with steady wages is the soft landing the market wants. Below 50,000 triggers recession fears and complicates the Fed's messaging ahead of Kevin Warsh's first FOMC meeting June 16th and 17th. Also on the calendar, the ECB meets Thursday and is expected to raise rates. The Bank of Japan is expected to hike in June. Synchronized G7 tightening is a risk markets have not priced in. Key levels. S&P 500, 7,550 is support. Break below that and 7,450 is next. To the upside, 7,650 is the psychological target. VIX. Below 15 is bullish, above 18 signals ceasefire optimism unwinding. WTI. Below $90 keeps the peace trade intact. Above 95 says the Hormuz blockage is here to stay. Here are the actionable takeaways. 1. Broadcom on Wednesday is the single most important event of the week, the AI trade's next major validation point. 2. Iran deal uncertainty creates two-way risk in oil and bonds. A signed deal pushes WTI below 85 and the 10-year toward 4.30%. A collapse sends oil above 100 and the VIX toward 20. 3. The jobs report Friday is the macro event of the month. Size accordingly. 3 thresholds: 150,000, 50,000, and wage growth. 4. Record short interest means any positive catalyst could trigger squeezes, especially outside mega-cap tech. 5. 9-week winning streaks are historically rare. The last one, in December 2023, produced another 3% upside before a 5% correction in January 2024. The trend is your friend until it is not. Stick to your process. The setup is clear. Data is deteriorating beneath the surface. Geopolitics are unresolved. But institutional positioning, systematic flows, and a broadening AI trade are keeping the tape elevated. Keep your data sharp and your logic sharper. I am Daniel Reed. This has been Market Lens.